And taking a look at this post coming from Reuters, oil surged and global stocks and bond prices tumbled as investors fled risk assets after U.S. President Donald Trump said the memorandum of understanding signed with Iran to end the Gulf conflict was over. That was a top headline that we were following this week. And as we know, the markets are heading into a pivotal week as investors keep a close eye on those growing tensions overseas, new inflation reports, and the Federal Reserve's next move. From the price of oil and what you'll pay at the gas pump to whether interest rates could stay higher for longer, the economic headlines this week could, of course, impact our wallets right here in America. So joining us now to break down what we should be watching for and what this all means for consumers is economic strategist Dan Varroney. Thanks so much for joining us here on Live Now from Fox.
Happy to be with you.
So let's just start with the markets first. Of course, investors are watching the escalations overseas. We know this. What are you expecting when the markets open, and what's the biggest risk you're watching?
Well, I expect the markets to have a bit of a pause. I think we'll see stock futures be down a bit. I think we'll see oil prices up a bit, and they're going to wait and see what things look like tomorrow morning when markets open. But I think that's what it looks like.
You know, one of the biggest concerns, of course, is oil. Are people fearing that dramatic spike?
Sure.
Do you anticipate that oil prices are going to remain stable, or do you think they might increase?
You know, we had a sustained period that oil prices were falling. We saw the West Texas crude numbers fall below $70, and that was welcome. Now they're just above $70 a barrel, and I think for the time being, they're going to stay there. If the conflict is prolonged, meaning there are repeated attacks night after night, we could see the price per barrel increase, and we'll see our gasoline prices up. Now, week over week, last week to this week, what I am noticing is that gasoline prices at the pump are up a bit.
Now, is there a price for oil where you kind of start worrying about if it is going to make a meaningful impact on the U.S. economy?
Yeah, we saw the West Texas crude numbers and the Brent crude numbers get at or over that $100 threshold, and that is a serious pain point. That's when we see gasoline prices go up. That's when we see food and product prices go up. That's when it starts to get painful for the American people.
And, just looking at the history of geopolitical events, what separates events that create lasting economic damage from those that investors quickly move past?
I think that's an interesting point, an interesting question. Here's my sense of the situation. I think that investors are not over the top worried at this point. I think that they are in wait and see mode. I think that generally speaking, investors feel very good. Over 10% of companies are going to report earnings this week. I think the earnings will be very, very strong. And I think essentially what's different this time is that there may be an end in sight. We may not see it, but there may be an end in sight.
Now, for people watching at home, what are some of the warning signs that they might notice to determine whether prices are actually going up or if they might see some relief and things are staying the same?
So here we are. We're in the midst of summer vacation season. This is where they'll start to see it. They'll start to see it when they go to fill their gas tanks and when they're on their trips, clearly. But another key threshold that I always consider in looking at economic numbers and economic strategy is when parents start their shopping for kids going back to school. Now, that's going to start right after the 1st of August because you've got some states opening in the mid-August window. So that would be the second point. So the first point is clearly the gas tank. The second point they're going to see it is at the back to school shopping. And I think those will be two key thresholds that I'll be looking at. I know they'll be seeing very closely.
And as we know, this week also brings fresh inflation data with both the consumer price index and producer price index. What are economists expecting to see with this?
The June numbers were especially hot. The producer price index was really hot. And I think what we might see is a cooling this time compared to the June numbers. But let me sort of give a little bit of an asterisk around that, and that would be as follows. So it will not have captured the increased gasoline prices at this point. So let's look at that. But I think that prices will be cooler than they were last month on both the CPI side and the PPI side.
Interesting. So, okay, if inflation comes in hotter than expected, how quickly could that change the conversation around interest rates, mortgages, auto loans, credit cards, all those things that everyday Americans are worried about?
I think that when we look at things like housing, first of all, housing prices have been way up and mortgage rates have been up. Now we've started to see housing prices, existing housing prices started to cool, and mortgage rates have been fairly steady. So houses per se are not moving, but there's a bigger challenge related to that. So the challenge is not only interest rates, but in a report coming out of the National Association of Home Builders, that there are about $130,000 plus in regulatory costs that are fixed to all the brand new homes. So those regulatory costs have got to come down at the local level, the state level, and the national level. I think until that happens, I think that costs are going to remain elevated. Now, I think the Federal Reserve will need to reduce interest rates in order for the cost of new houses and existing houses to come down. But I think as we come into Fed season again at the end of this month, one of the things that I have really held sturdy and fast on is that we're in an energy price shock still. We're not in an inflationary spiral, and I mean that very sincerely. That when the Federal Reserve looks at these numbers, 60% of these higher prices are coming from the higher energy prices. That's what's causing it. So, example, this is what I mean. So, if the Federal Reserve raises interest rates, how does that lower the price of gasoline? I mean, think about it. Uh, so that's why I think Kevin Warsh and the Federal Reserve, while divided at the last meeting, I think that Kevin Warsh is going to say, well, wait a minute. If 60% of these energy prices are driving the prices of food and goods and so on and so forth, why are we raising interest rates? I think there's a better game to be played around employment numbers, but then again, employment numbers are stable. I think their best bet, Anna, for the time being, is to just stay where they are and continue to collect data and see where things land in the September October window. It makes no sense whatsoever to be raising rates, especially in the middle of an energy price shock.
Do you think the recent global events might make it a little bit harder for the Fed to fight inflation?
So, if this was going to be a prolonged conflict, and what I mean by that is that, if we were looking at something like the Iraq War or the war in Afghanistan or the Vietnam War, I'd say, oh my gosh, we're looking at high prices for an extended period of time. But honestly, I don't expect that a year from now or even 6 months from now that we're going to be heavily engaged in conflict in the Strait of Hormuz and with Iran. At some point, this thing has to come to an end. And what I mean by that is that I think there's got to be a level of reality from the Iranians that they're not going to be able to bring in any revenue if they can't sell any oil. That's how that country makes its money. That's how it sustains itself.
We've seen consumers remain pretty resilient despite years of those higher prices and the borrowing costs. How healthy is the American consumer right now?
You know, Here's what I would say, that inflation at this point is surpassing earnings, and that's disconcerting. At the same time, I look at things like the retail sales numbers, and I look at the savings rates. The savings rates are down a bit, but at the same time, people are spending pretty well on summer vacations, and they're buying goods and they're buying services. I think the consumer, for the time being, is resilient. But if this goes on for an extended period of time, that may or may not be the case. But now, what I will tell you is, as a result of their tax refunds this year, as a result of lower rates that they're paying on withholding, I think they're in decent shape. And that's why we're seeing people going on vacations. And I think that's a good sign.
So, looking past this week, what economic indicator are you going to be paying the most attention to over the next month?
I am looking at jobs. I am looking at jobs. I am looking at the ADP private sector jobs report. The last report that came out, I was absolutely enthused. As I was watching the business analysts talking about the numbers, I was trying to figure out what their issue was, because there were 98,000 private sector jobs created. Almost 80% of them came from small and mid-sized businesses. So in our prior conversations, what you and I have talked about is that 2 or 3 new jobs come from small business. And lo and behold, that's where they're coming from now. So I think that there's sustained job creation at the small and mid-sized company level. I think that's good. I think I'll be looking for that to continue in the next set of ADP jobs numbers. Now, the last set of numbers coming out of the BLS were lighter than expected at 57,000. If they're that or better, I'll be a little cautious and a little more concerned. But if they come in better than that in the 100,000 or plus range, I'll feel very good about it. And then if we see that repeatedly, so to me, it's the jobs numbers right now. If we see jobs growth, that's a very good sign.
And before I let you go, any other top economic headlines that you've been following that we haven't touched on?
Yes. Lindsey Graham's passing, I think it's a big loss for the citizens of South Carolina. I've always admired Lindsey Graham for a few reasons. While he could be fiercely partisan, he could be very serious and very bipartisan as well. I have seen him support Supreme Court justice nominations from President Obama as much as I have from President Trump. And I think that's a very good sign. And I think that a lot of people are going to miss his leadership on global issues and national defense issues. And I know that a lot of people are also going to miss his bipartisanship and his acerbic wit and sense of humor. I think it'll be a long time before we see somebody like Lindsey Graham come along.
All right, Dan Varroney, thanks so much for your time, your expertise here on Live Now from Fox. We appreciate you as always.
Pleasure.